What's up everyone, welcome to Wise Wealth, where we dive into all things personal finance. Today we've got episode 2 of our Stock of the Week series. In Stock of the Week, we pick a stock for any host of reasons. It may have been in the news recently, a recent earnings report may have been published, or anything else, and we break it down in a video for you. We'll take a look at any recent events that may affect the stock, what its performance has been like, and what we think it will be in the near future. The analysis will go into the financials, what it's trading at, and ultimately, do we think it is a good investment at this point in time? At the end of the analysis, we'll rate the stock out of 10 to give you an idea of it in a quick and easy to understand video. And I hope that it helps you with your own investment decisions. Now I must caveat this by saying that this is not financial advice and is purely my own thoughts on the stock and intended for educational purposes. I'd always advise doing your own due diligence before investing your own money. So welcome to episode 2. If you've seen my other videos, you'll know that this is a relatively new channel, so we're starting this series to introduce some new content, and I hope that it will provide you guys with some value. If you're new here, then welcome to the channel. And if you're looking for content about stock market investing and personal finance, be sure to subscribe to my channel and hit that bell icon to get notified when I upload new content. Without further ado, let's get into today's video. So in today's Stock of the Week, we'll be looking at Royal Dutch Shell. For those of you who don't know, Shell is an oil and gas company, headquartered in the Netherlands and incorporated in the United Kingdom. It ranks as one of the largest firms in the world by revenue. They're listed on the FTSE 100 on the London Stock Exchange, and as of this video, they are currently trading at 1,232 pence. Their share price has been quite volatile recently. So I chose Shell because if you've been paying attention to the news, the board of directors and the CEO have made some tough decisions lately. They recently slashed dividends from 47 cents to 16 cents per share, bringing an end to their proud record of maintaining a consistent dividend since World War II. Despite navigating some of the toughest economic environments since then, Shell has finally succumbed to the major factors that have hit the industry hard. This video will analyse those factors, what the future implications are for Shell in terms of future earnings, and whether this stock is one that we should still look to for dividend income. If we have investments in Shell, is it time to cash out and look for opportunity elsewhere? So first off, looking at the performance. How has the firm performed over the last few years? Well, as you can see, here are the revenues and operating profits over the last few years. There has been a substantial rise in operating profit over the last 5 years, leading to a healthy position. 2018 proved to be an exceptional year, and 2019 saw a small decline. However, the annual revenue of 344 billion shows the scale of which Shell operates. The general consensus has shifted slightly over the last couple of months, with target prices mostly decreasing across the board. From the news of the dividend cut, Shell's share value dropped approximately 7%, with many investors who relied on this as an income stream selling off to look to invest elsewhere for higher returns. It's not quite at the 52-week low of 946 pence. However, it is now trading at a much discounted price. Profits are expected to take a big hit though, with demand for oil not expected to return to 2019 levels for many years. The nature of the pandemic has effectively brought travel to a standstill. Airlines have grounded their fleets and are struggling to find space to park their planes. Demand for kerosene has plummeted, and the UK government provides daily updates in their coronavirus briefing on the uptake in various mediums of travel, such as motor vehicles and more. The decline in motor vehicles has been significant throughout the pandemic. The firm seems well capitalized to cover this fall in demand in the short term, but it will have a lasting impact on performance. What's more troubling for Shell is that cutting production of oil and extraction from the ground is a severely costly exercise, which has led to a large surplus in the storage of oil. This vast supply on the market has crashed the price in recent weeks, among other factors, such that oil futures for West Texas reached negative values. This is unprecedented in the industry, but since then, the price of oil has stabilized slightly, with WTI crude now at just under $20 per barrel. In an interview with Bloomberg following the dividend cut, Shell CEO Ben van Beurden highlighted that it was a difficult day for investors of Shell, but it is, on the other hand, an inevitable moment. He cited the poor macroeconomic factors that have risen from the virus, but also more importantly, that we have a crisis of uncertainty on our hands. The fact that there is no specific end date, that we cannot know for certain when things will return to normal, has led to firms taking proactive steps early on, such as this, in order to preserve the health of the business, their financial resilience, and the security of the jobs of their employees in the future. The steps they have taken are not limited to dividend cuts, as there has also been a reduction in capital and operating costs of $8 to $9 billion over the next 12 months. Moving on to dividend analysis. What does the dividend look like for Shell? Well, as mentioned previously, the dividend has been reduced from 47 cents per share to 16 cents per share. On the right is the annual dividend history over the last few years. And as you can see, the new dividend payment refers to the quarterly dividend value, not the annual. Assuming this new dividend of 16 cents is maintained throughout the year, Shell would still provide an annual dividend yield of 5.1%. That's only a slight reduction on the previous year's dividend yields. Had Shell not cut dividends and continued to pay at their previous values, the stock would be providing a dividend yield of 15.26%. The dividend payments are generally seen as one of the most attractive elements of this stock, but looking at these figures, you can start to see why Mr. Van Beurden had described this as an inevitable moment. For those of you who have watched my channel for a while, you may remember that I actually included Shell in my top 5 FTSE 100 dividend stocks for 2020. If you want to check out that video, click on the top right hand corner, or I'll leave a link to that in the video description below. Personally, I think there is potential for the growth of the dividend when we come out the other side of this pandemic and the crisis of uncertainty is behind us. Obviously, there may be a couple of market factors that inhibit future growth. A lot of this depends on the price of oil going forward, and if it's possible for airports and airlines to successfully implement social distancing. However, this is highly unlikely. Only a couple of days ago, John Holland Kay, CEO of Heathrow Airport, was interviewed saying that social distancing does not work on any form of public transport, let alone aviation. There have already been suggestions that when airlines do resume regular travel, that they must vacate the middle seat between passengers. Having the load capacity capped at 2/3 of the plane will give management of airlines a lot to ponder, and whether there is viability in flying at such a reduced rate. So overall, I think that Shell is enduring a challenging time in their history now. The firm has lasted throughout tough times previously, and I am confident that they will weather the storm of the pandemic. The question is, what financial implications will this have on the operation of the business and the viability of their assets? The recent fall suggests that Shell is no longer the reliable, attractive revenue stream for investors that it once was. There is, however, a potential for the dividend growth in the future, but we may be some time away from the easing of restrictions on travel that have crippled the industry so hard. It will be interesting to see how the market reacts once we see a rise in economic activity. For this reason, I'm going to give this stock an average 6 out of 10. The reduction in the dividend will be a hard pill to swallow for current investors, but the management of Shell have demonstrated a proactive approach to a continually worsening situation for the industry. It is one of the few oil and gas giants to do so, and it will be very interesting over the next few months if the others follow suit. If not, they could regret not doing so earlier by risking their financial resilience for the sake of investor payouts. I think that if the demand for oil is not going to resume to 2019 levels for some time, then it's hard to see how Shell is going to recover the losses experienced in the share value anytime soon. Because of that, I think there are growth potentials in capital invested elsewhere. That being said, the fall in share value after the dividend cut might be seen as an emotional reaction by many investors, and we could see a marginal rebound in the short term. So, if this stock isn't on your watch list, keep an eye out for its movements in the near future. I know I'll be paying close attention tomorrow and how the market reacts. If you watched episode 1 of this series on my analysis of Barclays, you'll know that I did promise to keep you posted on what I did with that. Well, following the release of that video, the next day, the share rallied an enormous 17%. That took my personal returns to 25% in 2 days. That offer was too good to refuse for me, so I ended up closing my position with a 25% return. Interestingly, on Friday, following Trump's trade tariff comments, the stock fell significantly, and I managed to buy back into Barclays around 11% less than when I closed. So I made quite a nice return in a short space of time. I still don't think it's at its target price, so if you want to watch that video, click on the top right hand corner, or I'll leave a link to that in the video description below. I'd be really interested to hear your thoughts on this, so let me know in the comments below, what do you think of the situation surrounding Shell at the moment? Do you currently have investments in Shell? And are you thinking of offloading your stock? Were you thinking of opening a position in Shell, but have become a bit more hesitant now? Thanks for tuning in today. I hope you enjoyed the video. If you found it useful, smash the like button, I'd really appreciate it. If you want to see more episodes of Stock of the Week, subscribe to my channel and be sure to hit that bell icon to get notified of new posts. I upload all sorts of videos on this channel, not just the Stock of the Week stuff, so if you're interested in investing videos, top fives, personal finance in general, check out my channel for more, and until next time, see ya.